please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, focusing on some stocks now, as Amitabh Chaudhary heads to Axis Bank, the big question is who will succeed him at HDFC Life. The company is evaluating many options, including internal candidates as well as executives of other insurance companies. Yash Jain joins in with the details. Yash.
After Axis Bank appointed Amitabh Chaudhary as its Managing Director and CEO, it will be HDFC Life's turn when it meets on September 12th to decide on the name of the successor for Amitabh Chaudhary. Now, if you read the exchange notification which HDFC Life has submitted, it says that the board will be meeting on September 12th to consider the appointment of the next Managing Director and CEO of HDFC Life. Essentially, I've been speaking to various industry sources as well as my sources in the company, and they tell me that the company is unlikely to go for any sort of selection process or interview process or anything of that sort, because it already has a name in its mind which it wants to really, bring in place of Amitabh Chaudhary as the Managing Director and CEO. It's likely to be an internal candidate, and in that possibility, it is likely to be the candidate called Vibha Padalkar. Vibha is currently the ED and CFO of HDFC Standard Life. Of course, one more challenge which the company will face is that once if Vibha is elevated to the position of Managing Director and CEO, then the company will also have to find a new CFO in Vibha's place. But what sources tell us is that there could be an arrangement which the company will look at, under which Vibha will initially handle both portfolios, which is the Managing Director and CEO, as well as the position of CFO. And once she is settled in the new role, then the company will also, look out for a new CFO in place of Vibha Padalkar.
All right, thanks a lot for that, Yash. But meanwhile, Power Finance Corporation will be in focus today. The company reports its first quarter earnings. Abhishek is here to tell us what to expect. Abhishek, it's the end of the second quarter, but PFC reporting its first quarter numbers.
Well, to begin with, Mangalam, the key point is that NBFCs, due to the transition to IND-AS, are allowed to give their results to up to 14 September. So PFC will come out with results today. The key expectation will be how their restructured portfolio performs. Remember that in previous quarter, the restructured book came down by 25,000 crores. So how that portfolio performs and how the IND-AS transition happens, that will be the key factor to watch out. The reduction in overall stress assets will be very positive. Improvement in gross NPA, which was close to 9.6% in the previous quarter, will be positive. Loan growth in double digits. Remember that last quarter the loan growth was at 13.5%. Anywhere between 13 to 15% will be positive. The net interest margin at and above 3.5% will be positive. The rising bond yields have actually impacted the cost of funds for across NBFCs. Our poll suggests NII at 1900, while net profit to be at 1,250 crores. Back to you.
Okay, all right, Abhishek, thanks very much for that. Well, moving on then, former RBI Governor Raghuram Rajan has called for more bad loan resolutions outside the court as he fears the NCLT could get clogged. In an exclusive conversation with CNBC TV18's Lata Venkatesh, Rajan said that it is not up to the bankruptcy courts to deal with every small case, and added that these courts should be reserved as a final threat if resolution is not found.
We tend to look at one-off situations, a loan going bad. Well, bankers have to exercise business judgment. And if the overall economic environment is one of optimism, they get infected by that. The fact that a loan goes bad when it is made under such circumstances doesn't necessarily signify corruption or even incompetence. It could signify the general expectation is of strong growth. I don't think bankers should be faulted for that. The real problem comes, however, that when you have identified loans going bad, you should work very hard to either put them back on track or essentially get out if you can. That process hasn't worked well in India. The exuberance, the bad loans, that's something other countries have also experienced. But the cleanup, both by the bankers' side, as well as the support given by government agencies and so on, hasn't worked as effectively.
Well, would you, I mean, we are now pinning a lot of hope on the bankruptcy code and the NCLT process. At least two big defaulters have been brought to book and checks have been written by new promoters to the bankers. Are you now more confident that the stock of defaulters, the stock of bad loans will be resolved sometime soon?
Well, first, I have a more detailed note on my website, and that's my reply to the Parliamentary Estimates Committee, and people could look at that directly for a more detailed view. But really, I think the bankruptcy court is a very important, useful development, but we have to see how it plays out. Remember, when SARFAESI was brought in, when the debt recovery tribunals were brought in, there was a lot of anticipation that these would resolve previous debt problems. And very soon the courts got clogged in appeals, counter-appeals, and essentially recovery started dropping very quickly after the initial successes. It is very important that we make sure that the bankruptcy courts don't succumb to that very same process, which means that they have to deal with high-value items, a relatively small number, but much of the bankruptcy resolution has to take place out of court with the shadow of bankruptcy essentially acting as an ultimate threat for promoters and bankers who don't get their act together. It is not the place of the bankruptcy court to deal with every single situation of distress. If we try and do that, there is simply not enough capacity in the system to handle that, and we will find we're back to square one.
Okay, well, I guess many people are trying to resolve problems before they go to the NCLT, but the Reserve Bank has now made it practically mandatory that all loans above 2,000 crore, if stressed and not resolved for 6 months, should go to the NCLT. That's not the way to go? You think it can clog the NCLTs?
Well, I think the point here is to give some time for people to try and resolve their problems and to essentially make sure it's not indefinite. And I think you can pick the time that you give, but ultimately there has to be a threat. If they don't resolve it, then it goes to the final sort of showdown. So I think what we have to hope is much of the resolution gets done outside. Bankers sign on to it, the promoters bring in equity, we get the projects back on track rather than leave them languishing. That will be beneficial to the country and to its growth. And in the meantime, the NCLT deals with a few really tough cases.
All right, with that we move on. The Delhi government has launched a doorstep delivery of 40 public services. Citizens of the national capital can now call 1076 and request the service they're looking for a fee of 50 rupees. What are these services and what is the plan? Tim C. Jaipuria now joins us with the details.
Delhiites can now sit at home and order as many as 40 different government services. This will be similar to ordering grocery from your neighborhood store. The unique service has been launched by the Delhi government. Let me take you through the details. There are some of the services that people in Delhi will be able to order, which include caste certificates, registration of marriage certificates, Delhi family benefit certificates, learner's license, driving license, change in name or address in driving license or RC, old age pension schemes, water connections, sewage connections. As many as only now 40 services are being offered, but subsequently the tally will be taken up to 100. So how can you avail these Delhi government services? First, you will have to dial a helpline number 1076. The call center executive will inform you about the documents that you will need to apply for the particular service you want to order. You will then be asked to book the service of through a mobile sahayak, who is basically a facilitator for the services that you want to subscribe to. The mobile sahayak will visit your home, scan your documents and transfer it electronically to the concerned Delhi government office. All you have to do is pay a fees of 50 rupees per service. As soon as the document that you sought is ready, it will be sent to your address through speed post. In some services like driving license, you will have to appear for a test. While this looks very simple, there is a state-of-art backend to take care of all your requests. Delhi government has hired VFS Global, a company that is renowned globally for providing visas and passport services. The call center that you will be dialing in has to be set up by the company. Even the mobile Sahayaks are being recruited and trained by VFS Global. Currently, 5 mobile Sahayaks have been allotted for each of the 11 districts in the Delhi, but this number will be scaled up to 25,000 by the company. Before I wind up, a quick look into some of the more details. The services will be available between 9 a.m. to 9 p.m., including Sundays. You can pay up for the service using your credit card or debit card. And don't worry, the mobile Sahayaks who will visit your place will be police verified. So all in, it's going to be a great deal about the Delhi government's doorstep delivery.
Away from the equity markets, now let's take a look at the commodities arena. Manisha Gupta, as always, joins us this morning. Good morning, Manisha. Crude saw a bit of a pullback yesterday, but is that enough?
Not really, because, we have seen some pressure come back yet and again, and this is because of the U.S.-China trade escalation concerns, really. That is what is really weighing onto the prices here. And apart from that, of course, it is the strength in U.S. dollar, which is back, which is weighing on all of those commodities. But for the crude oil prices, nobody really is expecting a sell-off here because you have various strong fundamentals. Even with the Iran sanctions, you are looking at support continuing. It is also about the U.S. rig count, which has been declining. It is also about the U.S. production, which seems to have plateaued since the month of May. We haven't seen any new highs being made here, and the demand estimates are on the stronger side. So the markets do believe that the crude oil prices may have found their bottom for the near term. There is volatility, yes, as the crude oil prices continue to react to events and data and statements that are coming in. Having said that, the OPEC will not allow the prices to decline much lower, and we will see adjustments coming from them, and that would continue to support the prices. A quick word on the metal space, because we have seen some declines come in there. The strength in U.S. dollar, the U.S.-China trade concerns has continued to weigh on the precious metals. So you have gold prices trading on a weaker side, and most of the base metal prices also have started Asia on a weaker note.
Okay, well, Manisha, stay on. There is also a hearing in the Supreme Court on cryptocurrencies in India.
Oh, well, yes, that would be really important for people who are interested, investors, buyers and sellers in cryptocurrencies, because since the RBI banned banks from dealing with the any services to do with cryptocurrencies in the month of April, all the petitions would be heard today in Supreme Court. So a final judgment is expected today. So today is a day that the cryptocurrency watchers in India would be quite keen on knowing what really happens. In the meanwhile, we have seen the SEBI and the RBI continue to set up research units, send their units to other countries who have framed laws in cryptocurrencies. So that work on the side has been on, but the Supreme Court judgment today would be most important on where this emerging technology really goes on from here.
All right, Manisha, definitely those who are interested in cryptocurrencies will keep an eye out on that judgment. Meanwhile, keep an eye out on the cues coming in from the futures and options space. Remember, yesterday we saw the largest intraday fall that we saw on the Nifty since March 2018. So the biggest fall in all of FY19 so far. And the FNO cues coupled with the cash market flows. The FI sold about 842 crores in cash markets. The domestic institutional investors too sold about 300 crores. And the FIIs add to that sold about 631 crores in index futures. So far in index futures, they've been selling lock, stock and barrel from the start of this series. They have sold on every single trading session in September series so far. So what that has done is that all through this series, when they've sold, the long exposure, which was at 64% at the start of this series, has now dropped to as low as 47%. So there is a fair amount of shorts in the system. Yesterday too, about 12,250 short contracts were added on index futures. This compares with long addition of 2850 contracts. In index options too, not just are we seeing some selling in cash market and index futures, index options we're seeing selling in index calls. 17,000 short calls were added, and more importantly, long puts. They've been adding a lot of puts, protecting themselves or bracing themselves for a downside. Of the 100 rupees that the FIIs have deployed in index futures, 43 rupees has been towards buying protection on the long side as far as index puts are concerned. Yesterday we saw some selling at the 11,600 call, 11,700 call and 11,500 call. That's telling you that the bears believe that there would be hurdles on the way up. However, if the market does go higher, there is case for short covering. The put call ratio at one point sometime last series was at around 2. We were saying that is overbought, and right now it's fallen to 1.33, so watch out for the put call ratio. and some part of the street has taken some long positions because the Nifty futures premium, while the Nifty has fallen, has surged from 44 to 55 points. Most importantly, we need to keep an eye out on the fact that 11,400 is defended, because 11,394 thereabouts is the series low. Maximum put open interest at 11,400. If that is given up, maybe there's a case for 11,250. If not, short covering can take us to the 20-day moving average.
Okay, all right, Mangalam. Thanks very much for that. Well, let's move on to our bullseye corner. This week, we have Himanshu Gupta, Jay Thakkar and Ashish Kyal, who are battling it out for the strongest portfolio. Let's listen in to their picks for today.
First call for today on the buy side is going to be Arvind Limited. One can create long positions in Arvind, keeping a stop loss of 392 for the target of 431. Next stock on the buy side is going to be Hexaware, and long positions can be created in Hexaware, keeping a stop loss of 443 for the target of 488. Another stock on the buy side is going to be Abbott, and one can create long positions in Abbott India, keeping a stop loss of 8361 for the target of 9195. Final call on the buy is on the sell side is Apollo Tyre. One can short Apollo Tyre futures at CMP, keeping a stop loss of 247 and expecting a target of 225.
One can buy Persistent for a target of 907 with a stop loss of 865. One can buy Oro Pharma for a target of 831 with a stop loss of 775. One can buy NMDC for a target of 124 with a stop loss of 117.
All right, Jay Thakkar's last call is a buy on Suven Life Science with a target of 334, stop loss placed at 315. And we also take a look at Himanshu's picks. Himanshu Gupta's first pick is a buy on Mahindra CIE with a target of 316, stop loss placed at 290. Second call is also a buy call on Schneider Electric with a target of 125, stop loss placed at 114. Third call is a sell call on Just Dial with a target of 495, stop loss at 531. Last call, also a sell call, this one on SRF with a target of 1880 rupees and a stop loss placed at 1994.